Hi there, I am Cristof Ensslin from Pine Ridge Wealth. Thank you for taking 15 minutes to watch this OBBBA board briefing. I know board meetings are packed, so you don't need another PowerPoint marathon. So here I'm going to give you exactly what you need, the 3 things you need to know about the OBBBA changes to tax deduction of charitable contributions. They come into effect for tax year 2026, so it's very timely for you to watch it today. I'm also going to give you a one-page handout that you can share with all board members and team members and staff and even volunteers. And also I'm going to give you a few scripts of question and answers that you may need for donor conversations. Donors are going to ask you questions about these new changes in the tax law. And no, you're not a tax advisor, and you can always disclose that to your donors. But to say, I really don't know anything, ask your tax advisor, that never feels quite right. So it's important that you have the answers, at least on a very high level, so you can have those informed donor conversations. And just like you are no tax professional, I'm not a tax professional either. I'm a wealth manager. I'm a financial fiduciary. So keep in mind, every donor situation is different. So always encourage them to seek professional advice from their own financial advisor, from their own tax consultant. Now, let's dive in. Okay, change number 1, and that's a really big one for probably most of your donors, is the above the line deductions. Before 2026, if you were going with the standard deduction and you couldn't really achieve any benefit from donating to charitable organizations, that changes with the OBBBA starting with tax year 2026. So starting in 2026, donors who give cash to charitable organizations can deduct up to $1,000 for single filers, $2,000 for married couples filing jointly, in addition to the standard deduction that they take. So let me give you 2 quick examples. Say Maria gives $1,500 to charity, to her favorite charity, earns $60,000 AGI, that's adjusted gross income, and she files as a single, so she can deduct up to $1,000 from her taxable income in addition to the standard deduction that she gets anyways. Even though she might be in a very low tax bracket, she does get another write-off from her tax burden. Let's say another example, the couple Andrea and Mark, they give to their favorite charity a total of $1,500. Maybe they earn $100,000 combined. They take the standard deduction, so they could deduct up to $2,000, but they only gave $1,500 in 2026 in cash gifts. So now they can deduct those $1,500 in addition to the standard deduction that they can take anyways. And with that, reduce their tax burden, make their charitable legacy stretch farther, have greater impact. So here's your biggest takeaway as a board member, as a nonprofit development director or executive director, staff member, even volunteer. When a donor says to you, hey, yeah, I'm giving, but I can't tax deduct because I don't itemize my tax deduction, I take the standard deduction, you can say, you know what, actually that changed. Tax year 2026, you can deduct up to $1,000 cash donations or $2,000 cash donations if married filing jointly, in addition to your standard deduction for your charitable contributions. You don't have to do anything special, just keep the receipts in case of an audit. And that, my friends, is a very, very powerful conversation starter. Let's move on to change number 2. It is the 0.5% AGI floor. It's a little technical, but stick with me. If a donor itemizes, the OBBBA now only recognizes donations made above a certain floor, and that floor is 0.5% of the AGI, the adjusted gross income. In other words, the first 0.5% of your AGI that you do give to charity, and while itemizing, you cannot tax deduct. Only gifts above that level are tax deductible. Let me give you a quick example. Let's say a donor has $200,000 in AGI and they give $12,000 a year, maybe through a monthly $1,000 recurring donation. Now, 0.5% of 200,000 AGI is $1,000. So the first $1,000 of those $12,000 gifts, he or she cannot tax deduct. That means only 11 out of those $12,000 are tax deductible in the itemized deduction. So it's not that they lose the deduction entirely, they just lose a small slice of it. Now, what does that mean for your major donors? For donors who give a larger amount and itemize their deductions, for them, bunching becomes their best friend. That means putting all their donations that reach up to their limits, their AGI limits, in 1 year so that they only have to pay, so to speak, that non-deductible part of their donation once in 1 year. If we take the same example like before, the person or family with $200,000 in AGI giving $12,000 a year, if they give, instead of $12,000 a year, if they give the donations they want to give for 2 years in that single 1 year, that's $24,000, they still only give up that first $1,000 in donations that they cannot tax deduct. That means now, let's say they don't give monthly, but they give annually, a year-end gift. If they now choose to say, for example, on 15th of December, give $12,000 once, and then maybe again on the 20th of December, give another $12,000 instead of waiting for the new year, they only give up one time this $1,000, the 0.5% of AGI, as tax deduction, and can deduct now a total of 23 out of 24,000 instead of 2 times 11,000 out of 2 times 12,000, which would only be 22,000 out of 24,000. So when a major donor asks you, should I bunch or should I give annually, you can inform them that bunching may make sense because they can go above that threshold of the 0.5% floor more efficiently if they give, let's say, the donations they want to give for 2 years, if they bunch that into 1 year. And then do encourage them to speak with their tax advisor and their financial advisor, their financial planner, to make sure that that is the correct advice in their situation. Change number 3, and that's going to apply to your largest donors, generally speaking. Before 2026, the general cap of adjusted gross income of AGI that was tax deductible as charitable contributions was 50%. The TCJA of 2017 had raised that to 60%, but not permanently, temporarily, and it was set to expire in 2026. Now, the OBBBA made it permanent. So now you can always tax deduct up to 60% of your AGI in charitable donations for cash contributions to public charities. That is a powerful planning opportunity for capital campaigns, for multi-year gifts, and for endowment pledges. So when you are talking to a large donor about a large significant commitment pledge, then you can confidently say, hey, good news, the 60% contribution limit has now been set permanently by recent tax law changes, OBBBA, and that will help you give more tax efficiently to our current capital campaign, to our endowment campaign, whatever vision you are currently garnering pledges for. And that, my friend, that's a conversation that builds confidence. There's a couple of additional questions that your donors may ask you beyond the one, hey, I don't itemize, do I get anything if I give? We already covered that question. That's the above the line deduction, the change number 1 we had. The second question that you're likely to hear is, should I give cash or should I give stock? That needs to be looked at from case to case, because the cash donation gives the standard deductor an additional above the line deduction, while a stock gift, especially appreciated stock, could save the donor a lot of capital gains tax while being able to deduct the entire fair market value of their gift. Add the clear recommendation to ask their tax advisor or their financial advisor for an appropriate recommendation in their situation. Another question that's getting more and more popular is, should I use a donor-advised fund? And generally the answer is yes, because people with the DAF now have more options when it comes to bunching. They can give a whole bunch to a DAF, then they can disperse these funds bit by bit from the DAF, but the gift has happened, so the tax deduction can already happen in the year that the gift was given to the DAF. And especially if that gift is appreciated stock or real estate or so, then capital gains tax can be completely avoided. I've put all these changes for you into a little PDF handout, a one-pager, so you can print it out, give it to your staff, give it to your board, give it to your volunteers, share it with donors. No jargon, just useful information. Those 3 changes as well as the scripts are on there, and that's all free for you. You can get it from the link under this video. And one more thing, and that's completely optional. I'm offering a 60-minute online workshop that's called The OBBBA is Here: How Nonprofits Win Together in 2026. It's designed for donors as well as nonprofit professionals. It's a deep dive into several different strategies that the donors can use in order to save more in taxes while supporting your mission. If your organization wants to offer your donors the gift of education, to be a real partner in their lives instead of just asking for yet another donation, I provide group discounts for nonprofits that you can buy in bulk along with compliant invitation copy, so there's no real additional work on your end. If that's something that looks interesting to you, please go to donoreducation.com. Check out dates and times and ticket prices and the contact form so you can get in touch with me and I can share more details with you. That's it for now on OBBBA. Just to recap the 3 changes. Number 1, above the line deduction for the non-itemizers, the 0.1% AGI floor for itemizers, and the 60% AGI cap made permanent. Remember to get the PDF with the scripts and those changes for a handout to share with your team. Thank you so much for the work that you do in your community. You're a jewel and I appreciate you. Thanks for watching. My name is Cristof. Go forth and give smartly. And remember, I'm a wealth manager, I'm a financial fiduciary, not your tax advisor. This video is purely educational for general informational purposes only. Please consult your own tax advisor and your own financial advisor, and if needed, even your own legal advisor, to see which strategy is the right one in your particular situation. Bye.